Hi everybody, I'm Diane Brady. I'm here with Luke Cooper, who is the general partner of Latimer Ventures here at the Milken Global Conference. We're talking about the venture market. Let's start with, you're based in Baltimore. What's your investment portfolio look like?
It looks great. We're based in Baltimore. Latimer Ventures is a $50 million target fund focused on enterprise technology investments and the most brazen, bold, innovative, diverse entrepreneurs. Specifically the category of diverse entrepreneurs that we're investing in are Black founders. Because we think that they're set up to win more frequently than not. One in three of them. It's a great question. We think it's the pressure that gets put on them by the lack of available capital and resources. It's just like a diamond mine essentially, right? You have coal.
You become a diamond or coal, right?
Yeah,
You're in the diamond business.
I'm in the diamond business.
What's the market like right now? Because there's first of all, there's so much concern about AI. So is that becoming a big part of your investment thesis? Because I can't imagine enterprise tech without some element of AI.
It already was. I was talking about AI a couple of years ago, and we began investing in AI a couple of years ago before I even had this fund. Yeah. We see it as a big, sort of game-changing thing. And as companies become more modern, the enterprise becomes, more embracing of technologies. It has to embrace technologies in a way that accommodate more of its user base that is ever increasingly diverse today. It's customer base that's diverse. And we think that the Black founders that we're investing in represent, the kinds of technology innovators that are developing tools that are right fitted for these modern enterprise. Pienso, for example, is a company that we invested in that is building some of the most incredible data science tools and applications for Fortune 300, Fortune 500 companies. It's the way that we're going to win. It's the way that we're going to achieve true, greatness as an American society.
So, there's been a lot of headwinds with companies, and let me start with that. There's been a lot of people I've talked to who've been surprised at the lack of take-up of new technology, right? They thought we'd be further along given the tools that we have, that companies are still pretty much status quo. Are you finding that? Or do you think we're at a tipping point of some sort?
No, I think we're definitely at a tipping point. When I look at, I think the numbers are sobering, right? They tell you a different story. Like software sales are still at 15% year over year, growing at 15% year over year. So, the modern corporation is embracing technology. Digital transformations are happening across, the gamut of Fortune 1000 companies. They're all trying to modernize their systems. I think at the same time, you see this turbulence happening in the venture market, which is about a $300 billion asset class, important, no doubt. It's been a hard
place to be.
But it's been a hard place to be, no question about it. But I think part of that is because of the lack of experience of most VCs, right? Most venture capitalists are spraying and praying, right? They're taking in lots of money.
Yep, sprinkling it like fairy dust. You don't do that.
We don't do that. We take a very deliberate approach about the founders that we want to work with, and we work with them very deliberately and on a consistent basis, persistent basis almost, to drive value for them, right? So the average company takes about 16 years to go from an idea to an exit. We think that we can do that with our companies in 6 years and achieve 80% of the value capture that they would have gotten in 16 years.
So you're not worried about the current environment in terms of the opportunity to get your money back, rising interest rates, corporate spending going down, layoffs, none of that affects you?
Why would I when this category has historically never gotten valuations above, market valuations? All the valuations that they get typically are undervalued, right? And so, the founders that we're focused on are undervalued, but their companies are overperforming, and we have unique access to them. So this is a perfect market for us because finally the market is, getting rid of all the noise.
I'm interested in the whole realm of Black entrepreneurship because I've heard mixed things about the opportunities. And even take like post Black Lives Matter and George Floyd's death, there was this impetus companies had where they said they were going to invest more, give 30%. Did that not come to pass?
It mostly hasn't, and it's been one of the biggest travesties of the last 4 years, right? I think we had a real opportunity, and we still have that opportunity in front of us to correct a lot of the wrongs that will sort of debunk some of these long-term trends that we see happening in urban environments like Bridgeport, Connecticut, and Baltimore, Maryland, of long-standing poverty, right? Like the way you start to break these cycles is creating more available pathways to capital, to outcomes, to entrepreneurship, et cetera. And the corporates are responsible. They have a responsibility here to do exactly that. One of the roles that I have is the Distinguished Presidential Scholar at University of Maryland, Baltimore. It's all of our professional schools. The president there is Dr. Bruce Jarrell, and he gives me a lot of leeway to sort of make these arguments and try to corral these groups of disparate institutions that oftentimes don't work together.
So is your pain point getting the customer to buy, getting the customer to trust these startups that you're investing in?
That's part of it. Some of it is just plain old laziness, right? Some of
On
it is
whose part?
On the part of the corporates. They don't, why would I go?
Nobody gets fired for buying
That's
IBM
right.
or
That's
McKinsey,
exactly right.
that kind of thing, right?
No one gets fired for buying IBM, right?
Yeah.
Except IBM, right? But
Right.
what does IBM do to make sure that it's remaining competitive with Cisco? What does Cisco do to make sure that it's remaining competitive with M12 or Microsoft, right? These are the fundamental questions that they ask, but they are unwilling sometimes to exert the effort and labor required to uncover incredible talent.
When you look at the VC landscape right now, there's been a lot of people suffering. Where do you see opportunity, and where would you walk with peril, or trepidation?
I think it's a return to the fundamentals. We're going back to the basics. Investors and founders need to begin looking at the fundamental performance metrics of their companies. The CAC to LTV ratios, things that tell you
CAC to LTV. What's that?
customer acquisition costs.
Okay.
To acquisition to LTV, long-term value creation, right? Those are the kinds of things, stress tests that tell you whether a company is truly performing and merits the valuation that they're getting.
Would you be down on consumer tech? Is that a bad
I
place
would
to-
not, because when I look at the numbers, right, 1.7 trillion has been returned to investors through enterprise tech investing versus consumer 300 billion, maybe 700 billion, but when you take out WhatsApp and Facebook, it's a quarter of what enterprise tech investing has produced. And I think that level of sort of returning to fundamentals is going to lead to great outcomes for investors as opposed to what they've been doing.